Breaking news here on Martyn Lucas Investor. It's Members Week. We're doing mini reviews here for free for our members. Now and again, we have a Members Day and Members Weeks, and there's all special events that I do for my members. This is one of them. Canopy Growth, ticker symbol CGC. Are you in the stock? All these stocks I'm doing in my reviews, we rank for either 1 or number 2 on YouTube. Very exciting indeed. And one of my members, this was requested by Renatha, has just asked me, can you do CGC? So I'm doing it live for you now in a very, very quick review. Click the like button, tap the subscribe button as well, and let's get straight into it very, very quickly. Here we go. It's a mini review. Over the last few days, we've seen some growth, of course. We've got the elections coming up, 19%, 100%. I'm very, very confident that this is going to get passed. The reclassification is going to be done, rescheduling is going to be done, and all stocks in this sector are going to fly up. I'm very, very confident of that. 70% this month, as you can see, it's up to date, looking very, very nice indeed. What have we got over here? We've got people taking profits. We've got a hold or a sell from our Seeking Alpha analysis. No surprise there. Holding it or selling it. No one's really buying it right now. That would be a bit crazy. You should have already bought it. What about some news? Cannabis stocks rally as DOG proposes reclassification. No doubt about it. This is going to happen before the next election. Not because they care about your stock price, but they do care about your vote. Stocks rallied Thursday afternoon after the US Department of Justice formally proposed reclassification as a less risky schedule. In a statement put out on Thursday afternoon, the DOJ said the US Attorney General has submitted to the Federal Register a notice of proposed rulemaking, initiating a formal rulemaking process to consider moving this from a Schedule 1 to a Schedule 3 under the Controlled Substances Act. The DOJ said the move reflects the use as an accepted medical treatment in the United States. I'm very confident that this is going to happen. Purely and simply, they want your vote, and they'll do anything they can to get your vote. It's not rocket science really, any of this, is it? Anyway, it does say though that we are overvalued by 25%. We are now. It's been rallying up a lot recently, and of course it hasn't grown into its stock price yet, but it will. Once this happens, all these stocks are going to go up. We've said Tilray could go to $40, but this valuation isn't reliable. Only use multiples and doesn't use a DCF valuation. Let's scroll down. We can see that the revenue is pretty flat recently. Operating income is up 23%, but net income is also up 3%. But financing cash flow, which is positive, cash flow is up 16%. There you go. And operating cash flow is up 22%. But these are very small numbers of what is about to occur once this goes through. 1.4 billion in assets. We are holding cash as well, 186 million. Liabilities, 815, with 587 in long-term debt. So the balance sheet is pretty good. I would imagine when I get down to it, it'll be pretty good. There you go. Oh, actually, no. That surprised me. I see this in real terms. Let me go and see why. It's a 29% solvency. Let me go and look back on that. That surprised me. 1.4 billion in assets and holds cash, 815 million in liabilities, and long-term debt is, let me explain this, why that's not coming up very well. 1.4 billion in assets, and of which they do hold cash of 186 million. So that's okay. That starts all right. What we want though is not so much liabilities. We want less liabilities than assets. We want ideally somewhere in the region of half, and that's about where we are, to be honest. And the trouble is, I guess what it is, 72% of their liabilities is long-term debt. I probably didn't notice that. This is a very fast review. That's why I've gone back and checked myself. 72% of their liabilities is long-term debt. Now I understand. Even though the liabilities isn't too much when it compares to the assets, 72% of it or thereabout, 72.1 is actually long-term debt. That makes sense. However, even though that does give you a low rating of 29, which it is, it's a very low rating. Everything about that is bad, apart from short-term and long-term solvency. That's fine. But positive net debt is bad. This can turn around very quickly because if rates come down, which they will, that's a major catalyst for this stock. So even though the liabilities isn't overwhelming to the assets, it's nearly all debt. So that's not good. We don't want to see that. But again, that could be a catalyst when rates come down. Profitability is the lowest I've ever seen. Lowest I've ever seen. Again, no real surprise there because at the moment, everything is about getting rescheduling. That's when everything opens up. Financing opens up. Safe banking, advertising, all the rest of it. Money comes flooding in when we get that, and we're going to get that. So profitability now is low. However, I will have to say, if you are in this sector, SNDL is my favorite pick. It's much better than CGC in my opinion. Tilray is number 2, and this will be down the list. So it's not my favorite anyway in this sector. We've got a downside here from here on Wall Street, but a 69% upswing on the best. This is the medium. Let's scroll down here. Let's have a little look. We've got any reviews. Short interest 3.78, nothing massive there. Sentiment on the stock has been improving. I would expect to see this improve. Let's have a look. Last 90 days, 75%, 74%. There you go, 85%. Over the last 5 to 7 days, things are improving, and they're going to improve. This is very, very good, but I think there are better opportunities out there. There you go. There's my quick analysis review. I'm glad I checked myself. That's why I always double check if I can and correct myself wherever possible. Anyway, there you go. There's our review for Renatha Ibarra, who wanted a review this morning on CGC. Click above my head, down below, over here, and over here. That's it. I'm done. It's Members Day. I've done about 20 reviews. Very exciting, very, very quick. Now I've got to get and put them all out. Now the real work begins. Until next time, as always, take care of yourselves and each other.